I didn't start investing until I was 27 years old, but had somebody told me this one rule, I definitely would have started sooner. As a new investor, learning how to research dividend stocks can not only be overwhelming, but it can keep you from having your money make more money in the market. There's a lot of stats that investors eventually have to get to know, such as payout ratio, price to earnings ratio, funds from operations, and earnings per share. And those stats are really important in the long term to help make better investing decisions. But when you're starting to invest for the first time, what's just as important is giving that money enough time to generate you long-term profits. And that's even more important when you're investing into dividend paying stocks that can start paying you passive income as soon as you start investing into them. But since we don't want to completely avoid those stacks and give ourselves a higher chance of investing into bad long-term dividend stocks, I'm going to give you guys the one huge rule when it comes to investing in dividend stocks that no one talks about, how it makes it easier to invest in dividend stocks. And along the way, I'm gonna give you guys some examples of dividend stocks that fall under this rule that you can start investing into as a beginner right now. You know, when you're sitting around with your friends or your partner and you guys decide you want something to eat, there may be that case where you want to try something new. But when you try something new, what do you have to do? You have to figure out where that place is. You have to look at the menu, see if you like the food. You have to see how much it is. You gotta look at the reviews. You gotta make sure that you can use DoorDash or Grubhub or whatever you use so you can get the food to you just in case you don't want to go out. And by the time you look at all that information, it's been like 30 minutes and you're a lot hungrier than you once were. Alternatively, you could have saved all that time and order what's usual to you, and you could have used the time when you're not that hungry to do the research on other places for the future. Ordering food from a place you've been to would have saved you way more time because you understand their business. One of the most common tips that I've seen a lot of YouTubers give to new investors out there is to make sure that you understand the business. Even Warren Buffett himself has said, never invest in a business that you don't understand. And even though there's a lot of data out there when it comes to investing that'll make sure the decision you make is the right one, here's the one rule that will make all of that so much easier as a new investor. Invest in your lifestyle. One of the toughest things about investing, especially for new investors, is the psychological aspect of it. When you look at a stock chart, you see the price has gone up, and you see it's gone down again. Then you see it's gone up again, and then you see it's gone down again. It can really mess with you. But history shows that in the long term, no matter how low that stock price gets, it will ultimately trend upward. At that point, it's all up to making sure that you pick the right stock to invest into. And here's where the investing in your lifestyle aspect kicks in. Most of the companies in your everyday life are more than likely publicly traded stocks. And those publicly traded stocks will normally have a very good long-term growth that's in the positive direction. And typically they make enough money every single year to where they can distribute a certain amount of those funds every month or every quarter to their shareholders in the form of dividends. For example, I am a diehard Samsung fan. You can't really tell, but I've had a Samsung phone since I was in, high school, so over a decade ago. But one of my favorite investments is Apple. I see all the phones they come out with and how successful those are, the MacBooks, the AirPods, the iPads, and ultimately the economy that they can create and how accepting that is to the majority of people in this world. So regardless of what the stock price happens to do in certain periods of time, which isn't always great, I know in the grand scheme of things they're going to be in the positive direction, which is why I'm still in the green, and which is why I'm consistently getting paid dividends. Other companies that may be a part of your lifestyle as well, just like Apple, are Target, Costco, Starbucks, and McDonald's. Despite how you may not want to go to McDonald's every now and then, these are companies that are accepting to the masses for the most part and will bring those great returns and long-term growth over a long period of time. The second reason why investing in your lifestyle makes it easier for new dividend investors has to do with being a freshman in college, and just follow me. If you went to college, you more likely started off as a freshman. And if you start off as a freshman, you take those prerequisite courses, which are your Englishes, your maths, your world geographies, world history, those classes that you really don't like and you just really want to avoid. But as you become a sophomore and eventually a junior, you get into those degree-specific classes where the population of those classes are less than 300, you become even more interested. So interested to the point where you might even enjoy doing the work, you may even enjoy doing a little bit of the studying. The same can be said with investing in companies that are part of your lifestyle. Doing the research becomes a lot easier because you're interested in those companies. You start learning about those data and analytics because you're interested in those companies, and you start growing that knowledge over a long period of time. And from that point on, you may catch yourself going from researching that stock to maybe another different stock and company in the same sector to maybe even another different stock and company in a totally different sector. Investing in your lifestyle isn't meant to be a tool to where you use to invest with a whole lot of money. It's meant to be used for new investors to go on ahead and get their feet wet with the stock market and start making a little bit of growth while they do research over a period of time. Especially because those statistics can be really overwhelming in the beginning. And oftentimes investing in stocks that are representing companies that are part of your everyday life already have very attractive stats over a long period of time, which is why they're so popular to you and probably really popular to a lot of other people. Those companies are typically really beneficial for long-term growth and also really beneficial for long-term consistent dividend payout, even payout that may increase over a long period of time. And getting paid consistently is extremely important, especially if you're trying to get paid dividends every single month. And these three stocks that I talk about aren't really stocks based on companies that are extremely popular, just like the McDonald's and the Targets, but these companies have paid me every single month for the past 3 or 4 years. So make sure you check this video out. Hope you guys enjoyed this video, and until next time, as always, take care.